Well, Rob, thanks for joining me today. I appreciate it. All right, everybody, we got Rob Stewart here from CR Equity. It's a company that I found extremely interesting, super cool website. Definitely check them out. Welcome to the team. I appreciate you jumping on today.
Steven, I appreciate it, man. Ranger lead the way. Thank you so much for inviting me. Thank you for your service. It's a blessing and an honor to be here. Like I said before, when we had our conversation a little over a week ago, it's really cool to see young men like yourself make a really good transition from our armed forces into entrepreneurship, which is kind of scary. Very similar, I'm sure, to doing a 30-30 jump out of a helo or doing the Derby Queen. It's probably not, it's as scary, whatever, right? We get through it, right? Um, I will tell you that when we first started our journey on determining what CR Equity was going to do, it really started, Stephen, as a pain point. And what I mean by that is that, I'm kind of sitting around my kitchen table and I've got to find a better way of doing business. It's the middle kind of in the middle of kind of COVID. There's not really a lot of things going around. I need to put food on the table from a perspective of getting deals in the door. I got a lot of deals that are coming across the desk, but I don't know where I actually really spend my time, right? So we kind of came up with an underwriting kind of due diligence, if you will, checklist. And then that started into, as a technologist and someone who kind of understands a little bit of code, how do we automate that, right? So we brought out some JavaScript, we put a little bit of C in it, some basic language. And then I taught myself a little bit of Python, and I was like, all right, I'm gonna make this a web application, web basis, right? So now I can upload documents and I can scan them utilizing an OCR, call function, if you will. And then probably, 2023 rolls around and everyone started using this four-letter word called AI and, blockchain and security and smart contracts. And I'm like, well, this looks interesting. So, I bought a lot of books and I could show you, it's a little dark here, but I could show you this bookshelf I'm looking at. It's got a couple hundred books on it, but I self-taught myself enough of nodes and different types of keys and legends and ledgers, and everybody uses blockchain, but nobody knows what it is. To be transparent, CR Equity utilizes an immutable ledger. We do use blockchain as a part of the system, but the system is actually built on a immutable ledger, which just basically means that it's very basically tamper resistant. I wouldn't say proof, never say that. But so what we wanted to create was a common operating picture for everybody involved in the equity lending and funding process, right, Steve? So as a person or a borrower, as an operator for a real estate practice or investment firm, you're owed the ability to understand where your capital is coming from, where it's going, and then where you are in the process of securing capital for your project. The problem that we face is that banks in the United States and around the world are really scared of their own shadow, especially after 2008. So we over paperwork things. We ask for a lot of things that, while our documentation purposes really don't really have a meaningful impact on the project. What really comes down to, and what we tried to do, is we boiled our process down to 27 key performance indicators in one single instance. So it's almost like TurboTax for securing a commercial loan. And that process is irrespective if you're asking for $100,000 for a fix and flip in Smith Station, Alabama, or if you need a $10 million, refinancing opportunity for a shopping center in Dallas, Texas. It's all the same. So it's almost like the military where everyone has a common operating picture. Everyone's head is shaved. Everyone is issued a uniform. Right? Everybody gets an ID card. You get your canteen, you get your MRE, and you're all treated the same. So basically, we took all of this data and we said, all right, we're going to structure this in a fashion that once you complete one step simultaneously, you'll open up these other doors. And while you're answering questions and providing data, we're going to automate and basically take a structure format, like almost like a Tetris board. And those little pieces of information are going to be truncated and thrown about on a big board, right? A big, big, big puzzle. And when we get done with this puzzle, we're going to get a funding decision, either a yes or a no. But we're going to do it in such an automated fashion, utilizing AI and some other things like neurolinguistic programming. And we have these things called sentiment and contextual analysis that know how you're feeling or what your desire is. And it's going to take all these things in place at one time. And by the time you get done with this journey in about 5 minutes, we're going to give you an underwriting decision that, based on the information you gave us, if everything checks out, we're going to put our stamp on it with blockchain and say, we'll do this deal, right? And the cool thing behind the software is that every person, you, me, user, broker, lender, escrow agent, lawyer, appraisal company, we all had to go through an AML and KYC. So for whatever reason, if you get on there and you have a bad whatever, we already know who you're dealing with, because in order for them to even have access to be on the platform, we know who we're dealing with. Again, you're able to have a common operating picture in front of you. So why do we do that? We do it because now that we understand your pain point, we've got all your information and data, we understand what your needs are. Now it's just a parametric or an algorithmic function to unlock another door to get you what you need. So now we've cracked the hardest problem. Now we bring a solution. Now, after we've provided you with terms, you've accepted them, the lender says they're good with it. We've got to do the compliance stuff. So once you accept terms, we order your appraisal, we open escrow, we notify the attorney, right? Boom. Now on our platform, we've actually integrated third-party insurance quotes because we have all this data. And because we're doing this in a Costco way, and we're adding value, we're doing volume, we actually teamed up with Rate Insurance Company, which is our preferred rate insurance company provider. And because of the fact of what we do, we're able to structure and save time and provide a value-added benefit for the client, all in one instance. So imagine this, Steve. You come on, you got your project in Smith Station. It's you and your wife's first fix and flip. You're going to do a duplex right there in Phoenix City, right? And, you're sitting there and you're like, all right, man, I'm cool. I'm ready to go. I got everything ready to go. And it's your first one, so you don't know what you're doing. You got your cash to close, right? You got your appraisal, you got your survey, you got your plans and permits. And it's the night before escrow, right? And your wife forgot to get the doggone quote from Aflac or AIG or Zurich on the builder's risk policy. And now you're running, everybody's at closing. The seller said you're not going to extend it anymore. You're going to lose all your earnest money. This happens, right? Oh, yeah. This is a real life. This has happened. Like I am, what I'm telling you right now, the entire platform of every step that we built is based on a pain point from a client, not just Rob, but like an actual pain point. We have lost deals because a client forgot to get an insurance policy. And most people think you can go get it like a car insurance policy. No. It takes 3 to 5, sometimes 7 business days to underwrite an insurance policy for a commercial asset, depending on what it is, especially if it's your first one. Most people don't know that, right? And I'm telling you, if you lose $50,000 or $100,000 earnest money, $200,000 earnest money, you're only gonna make that mistake one time. So when we designed the platform, Steve, we thought about how do we make access to capital quick, painless, and easy, right? How do we make this like a USAA or a Navy Federal or a Capital One auto loan? Right? I don't get paid by any of those guys. I'm just giving you an example, right? Where you can download a mobile app, you can put in some key information, scan your driver's license, get a quote in 3 minutes, right? We're the only platform in the United States or around the world, from what I understand, that gives you a real-time quote based on today's SOFR rate and real-time feedback of what lending products are going for in the market. So our platform is responsive, it's quick, and it allows you to move at the speed of business, right? And what you asked me last week was, I really like the fact that you designed a system that addressed your pain points. And I thought about that. And Steve, to be honest with you, we try to design a system that essentially is like allowing you to do business, right? Where we're not the cheapest. We may not be like the end all be all, the Cadillac of the flagship of the fleet, but it's a 95% solution to what you're trying to do, right? And if it's your first time out, if you're looking to be an investor, if you're looking to break into commercial real estate, if you're looking to tokenize real estate, if you don't know what tokenized or fractional ownership of real estate is, or you've never done a loan before or whatever, we have a really, really nice, robust AI assistant that helps walk you through that. And you can check it out 24 hours, 7 days a week, and it will answer any question you may have. Like it literally is a free, I think it would call it junior college course. Because every time you and I have a conversation about real estate on the platform, it learns. What we're doing right now, believe it or not, this video, when I load it into our back end, is going to strip out the transcript. It's going to, just like the technology on the software on the platform, right? It's going to search it out for the key parameters that we program it for, and it's going to become part of the knowledge base. One of the things that we did that differentiated, frustrated the shit out of my team, excuse me for using that language, about halfway during development, I shifted because I want to add value, Steve, right? And I didn't want to create another bill for somebody. I didn't want to like have a subscription to the service. And I don't know if you have Netflix or Hulu or, Amazon News or Apple News or whatever, but I use this example all the time. A couple years ago, I have a 5-year-old. My son, we had a Tahoe, and I had a Disney Plus subscription in the Tahoe.
Yep.
I also had one at home, and then I had one on his iPad. Dude, I was paying like $60, $66 a month for the same damn thing. I didn't even know about it. And I had done that for like 3 years. I mean, it had ended up being like $1,500 just for Disney Plus, right? So imagine if I charge you five, $600,000 a month for AI to utilize to go find money for you, but you only use it once a year, or you only use it twice a year, or you only use it every time you bought a property every 4 or 5 years, right? Your ass is just sitting there paying and just paying a subscription, and Rob's getting rich and driving Cadillacs, but what kind of value are you getting out of that? So we changed the model in two different ways. Number one, we created our own large language model, which is what I just talked about. All of our data is open source and what we have come up with. We didn't go out here and borrow, rob Peter, pay Paul. Everything we built, the code itself is native, is germane, like, and we utilize references of open source. So all the things that we have, what we call a single source of truth,
Mhm.
right? Comptroller's office, if you have a publication from the National Mortgage News Network, these EDUs and what are considered authorities, right? That's all our data that comes in there. And then we train that model to be responsive to what you need. So when you have a question about, hey, what's the difference between preferred equity and mezzanine debt and a capital stack? Which comes first? And if in the event there's a default, how is that structured? Who liquidates first? Is PACE equity considered an assessment financing or is it considered debt? And how does it structure? Is it a reduction of NOI when you do a refinance on senior debt? How do I negotiate that in the capital stack? All these things, believe it or not, are available to you. But you don't need to know all those things because you just care about getting a loan and building your dream or refinancing or buying a property or whatever, right? We take care of all that for you. And we do it as a value added proposition. So when you come on the platform, you sign up, you register, all that's for the freeness, free 99. You don't pay anything. You get a term sheet, all that's for the freeness. You like what you see, pay 250 bucks, right? That just covers the cost of AWS and data. We move you along to the process. We order title, order escrow, notify the attorneys of, we're getting ready to close a deal. You pick your closing date. Like the AI comes back and says your estimated, title clearance date is this. You can pick a date anytime after that, depending on the state. If it's an e-title record state, it could be the next day. Some states, depending on where you live at, maybe 3 days. It just everybody's a little different. I know California is like a 2 or 3 day window, something like that. But some of the states have different laws, but we account for all that. But you know what's going to happen. And if there's an issue, the AI assistant is either going to call, text, or send you an email as to what's going on, right? So at the end of the forefront, we're providing technological solutions, Steve, but we're also adding value, right? We're adding value where people have pain points. And I think everything that you and I have talked about, and I'll kind of shut up and let you ask whatever, but we're in that situation where I have metrics on the admin and management side where whenever a client comes on, asks a question on our AI chatbot, and we don't have an answer to it, I get an email alert immediately. I get a text alert. Hey, look, anonymous user or Steve Sampson came on to the platform and he asked this. And we have his contact information, but we were not able to render an actual answer to his question. What do you want to do with that? So I have analysts on our side that immediately research that, right? And we find out where the loophole is in the large language model, and we fulfill that gap. And within a day or within an hour, when you come back and ask that same question, we've done this in testing. When you come back, you're going to have this wall of information. And one of the things that we're doing right now is we're working with one of the large AI data providers. Can't tell you the name of it yet, but one of the chat GPT type like providers is actually going to be in our back end. The issue that we have with integrating that is there's hallucination issues where you can ask it questions and it can kind of go off on a fairy tale. And then there's also issues of you asking it things that are not relevant to what we're trying to do and it giving you things that we shouldn't be talking about. So we have to ring fence and control those spontaneous utterances, right? So we're creating pathways to do that. We've got some smart people that are working on that. But as you can imagine, with being able to have 135 different languages with AI, what we say is potato is somebody else's tomato and things like that. So it gets a little difficult, but we should have that mid of Q2 of 2026. That's something that I'm really looking forward to is actually having the assistant not only be able to communicate to you within English, but also in your native language, because we are looking at impact investments, across border investments, being able to take tokenized real estates from different parts of the world and provide an open platform for people to trade real estate and trade financing in one area. So we're slowly but surely expanding globally with the capability.
Didn't realize that piece of it. That's very interesting. Yeah, I mean, I assumed that your natural level of expansion, I get the kind of guy you are. I assumed you would be doing that eventually. I didn't know it was that fast. The global expansion piece. Yeah.
Yeah, I mean, Steve, the problem is, and I hate to say this, right? But I got to be transparent. I got to be honest with myself, right? When Jeff Bezos comes out and he admits 2 years ago, 3 years ago, that he knows that someone is going to come and put Amazon out of business one day, and that's Amazon, right?
Yeah.
The only way you stay relevant, especially in this AI, like AI is going to continue to be worse than the human computer. The human computer like capability doubles like every 4 6 months. Remember, do you remember like when we were literally in high school, right?
Mhm.
And we had a prepaid phone. All right.
Yep.
So probably like when I was 16, I think I was working at Piggly Wiggly or something there in Phoenix City, not too far from you, off 280. Not,
Not too
like
far.
literally right off, not too far from you. That the Piggly Wiggly right over there.
Yeah.
And I remember I had my first cell phone and it was a prepaid phone. Well, by the time I graduated high school, we had free nights and weekends, but it started at 9 o'clock. Then by the time, we were in, college, we had like T-Mobile's Fave 5. And then Verizon had the in-network calling, which allowed, unlimited call.
Hmm.
Technology continues to innovate. Different offerings and different services attract users, they attract clients. There's a grab, but where we distinguish and we're different than I think a lot of other people that are quote unquote doing AI or in this AI thing is number one, I'm here to add value,
Yeah.
right? I've made more money than my parents. So if I died today, I would live a comfortable life, if I stopped working. So it's not really about the money for me. It really is adding value, right? But the second part of that is adding value through innovation, Steve, which is we're in phase 1.0 of probably a 25 phased platform. I get good people like you. Now, good people like you are very hard to come by, but I get some people that are in a close second and third, right? Where people give me some great ideas and they want us to help them with this and that and all this kind of stuff. And some of them are kind of like, wild hair ideas, but some of them are really good that I write down in my little black book. And I'm like, you know what? That's going to be a good phase two, a good phase three project, right? So the reason why I'm telling you that is the way, kind of like what people say about China and some of the countries of concern, the only way we stay relevant is to add value and to continue to innovate,
Yeah.
right? As people provide, they have problems, they can't address a concern, they need help with that. If you're providing value and you're innovating, just like what you said, right? Man, I went online and I didn't even know you guys existed. And I was like, oh my God, you do all these cool things, right? And it's like and when you first look at what we do, you're like, why the hell would somebody want to do that? Like that seems really complex and complicated. But then when you start pulling the onion back, you're like, that's just that layer on that cake. And okay, well, there's a little ice in there. Here's a candle. Here's some sprinkles. And then, you finally get to the cupcake, right? But at the end of the day, you just had a regular old vanilla, batter. And you're like, wow, okay. When you put it all together, it seems pretty cool. But we really just started off simple just to solve challenges and problems we face every day. And you're going to continue to have those things, but in order for us to stay relevant, we know people are going to try to crack the code. We know people are going to steal the technology. We know that, patents are only like firewalls temporarily. We know that people are just constantly doing open source intelligence on the platform. And we know that, just like Jeff Bezos said with Amazon going out of business, if we're not innovative and we don't add value, yeah, I may be able to come in here and grow the company and sell it for $100 million in 2 years, but it'll be out of business in 3 years because it doesn't have value to anybody. So my goal is to always have conversations with folks like yourself, figure out what those pain points are, and say, yeah, I think we can do that, and this is how we'll do it. And as long as we stay relevant and add value, I think we'll be around for a little bit.
I think you got the principles down, right? Totally agree. Value. You sound like you guys, you might be somebody who listens to Alex Hormozy a little bit. He's all
Yeah,
about value.
um, I'm kind of partial to Layla. Layla uses the F word a little bit, so I got to meet Cody Sanchez, which Cody drops the F bomb too. I got
Yep.
to meet her in person at the Entrepreneur Conference this last summer. Right? I think it was in August. I think when we or September.
Yeah.
And
Mainstream millionaire ones.
yeah.
Yeah.
Yeah. So I'm a big fan of her. All these people, Steve, Robert Herjavec, like I met Robert, I met Damon John, just common people, man. And like, believe it or not, what's really cool when you actually, because I'm a little different than a lot of people, man. I'm a salesman by heart, but I don't sell CR equity, right? And I tell our team, we don't need to sell, right? All we need to do, right, is be in front of that person for 5 minutes and show them the value. And the platform is going to sell itself, right? So like I had a guy in the same vein, literally like 2 days ago, he posted on Facebook. He says, looking for $1 million, 30% LTV, located in Roanoke, Alabama, rural. Don't contact me if you have requirements on rural. It's rural. I know where Roanoke is. I was born in Anniston, so I know exactly where Roanoke is. Randolph County, Alabama, right? Not about 2 hours north of where you're at. About two and a half, probably. I said, yeah. So I sent the guy a message, and I said, his name is Patrick. I said, David Patrick, excuse me. His name is David Patrick. I said, Dave, I'm Rob. I'm a direct lender. I have a fintech AI platform. Please check out this video. Let me know if you're interested. Now, he had probably 45 hard money lenders on this string, right? And he responded to me immediately, right? We have a meeting on Wednesday to go over his term sheet. But I sent him the video on the Flex 50. He responded back, and I can't use exactly what he said. He used a couple of expletives. He goes, I do not effing believe that you can get me a term sheet in 5 minutes. I said, of course I can. So he sent me his little data room. I uploaded his PFS, his scheduled real estate owned, and I think he had like a business plan or something that kind of gave like the outline of what he was the source of funds for, whatever.
Yeah.
And I got him a term sheet, you know. Literally, I mean, Steve, this happened at like 9:45 at night. And I even told him, I said, man, I don't have time. But it took me about 8 minutes, right? It took me about 8 minutes. And he couldn't believe it. He is going to be our first loan utilizing this new loan program, the Flex Fit. And he told me that he would be my first you because we're coming out with a podcast too in January. He's going to be our first user experience. We're we're not just going to do these things with you, Steve, and talk about all these things that we do. We're going to prove it. We're going to find the most difficult, nastiest cluster foxtrot deals we can find. And we're going to bring them on the podcast and we're going to let the people tell them their experience so they can actually see the AI. They can actually see the utility of the software. And it's not just Rob, right? It's like, hey, this is what's going on and this is what we're doing. And sorry, I'm moving around because I got to get power for my laptop. But this is how we're adding value so you can actually see it. But our biggest thing, like I said, Steve, is like, I think you asked me the other day, what was your question you asked? What my biggest challenge was?
Yeah, probably something like that.
Steve, my biggest challenge was, and I'm gonna be honest with you, I think I'm gonna run out of capital. I think I'm not trying to be like or Kurt, but there's a lot of deals out there that we can do safely with the right framework around it. That a lot of banks, you and I had talked about like JP Morgan coming out with its, tokenization of its coin, and you thought Goldman Sachs was going to follow suit, and we talked about how we thought Bank of America was going to do it too, right?
Yep.
But did you know that Bank of America doesn't do construction loans? Their underwriting guidance actually prohibits them from actually really doing a refinance on any investment property that's not cash flowing at a minimum 1.25 DSCR. All these banks have these like prohibitive clauses
Hmm.
that so the reason let me tell you the reason why I know this.
Yeah.
The reason why I know this is number one, because of the AI we did competitive market analysis of all these guys and girls, right?
Sure.
But it's kind of like when you were active duty ranger, right? You keep your friends close, your enemies close. You got to always know your intel. But more importantly than that, and this is what I told you the other day, when you come on the platform and we underwrite your deal, right? We're in that 12 to 36 months, 60-month space. We're like primary to permanent debt bridge loan financing.
Hmm.
We're not cheap. We're quick. But you don't want to be married to us. We're a shotgun wedding. We're a Las Vegas wedding kind of thing, right? We're just to get you across the other side. We're combat engineers, man. It's gonna be speed, but it ain't gonna be comfortable, right? Kind of thing, right? We're gonna put that bridge down. It's gonna kind of be a little, you know. So, but in order to do capital preservation, preserving the small capital that we have for our facilities, right? We have to have forethought of, okay, what is this going to look like? And based on data available with our large language model, and more importantly, what trends are out there for that market, for this user experience, for this credit score, for this type of asset, based on market conditions and trends, what is that DSCR going to be at, that debt service coverage ratio going to be at in 24 months, 36 months? And if I were to call Steve, who's the commercial lending vice president over at Wells Fargo and say, hey, I've got Bob Smith over here. He's been paying his, you know, bridge loan on time. He's got a DSCR of 1.22, cash flows at this. If I sent that guy a message, right, and had him on the platform where I could have him as a referral partner and again, offering value to my client where yeah, I had him in a 24-month bridge loan, but you know what? He did so well at 19 months, he hit his DSCR, and I can just send that package over to Steve at Truist, who will now refinance that client out, cut his interest rate in half, give him a permanent loan debt. CR Equity makes a 1 point referral fee, but guess what? The client saves $400,000 on interest because they're not having to pay that for the next 4 months, saving 4 months with no prepayment penalty. I get my capital back. The client goes from a 12% interest rate to a 6% interest rate. Truist gets a file that they believe in confident because it's underwritten to their standards. And Steve, guess what? You're happy as shit because Now all that money that you are putting out on interest, you get to put back in your pocket for your family and your kid. How do we do that? We only do that by having the data in front of us, having the intelligence in front of us, and then we underwrite at the time that we issue our note to whatever the desire is going to be. Right. So if a client comes to us in our software and they want to do a multifamily, I'm gonna throw some knowledge in you how smart the technology is, right? They want to do a no multifamily, but they're in Miami, Florida, and they decide to take the tax abatement. So in Florida, they have this tax abatement law called Live Local Live tax, right? I'm sure you've never heard of it. Most people have.
I've known.
So basically, it's a reduction on property tax. 'Cause that's how the state of Florida makes most of its money, is property taxes. So it reduces property taxes and it kind of does a restriction on rents, right? Kind of keeps them because it live local live. Florida wants you to live and work and eat in the same place and does a cap on raising a rent, stuff like that. Well, the problem with a lot of Floridians, the people, Florida developers, is they want high leverage, fast speed of money, and then really, really low interest rates in their takeouts. 95% of the deals you're going to get out of Florida, and anybody listening to this podcast, I challenge them, I'll give them $1,000, they can prove it wrong. But about 90% of the deals you get out of Florida always are going to have, especially on a large, I'm talking about $100 million plus development, is always going to be a HUD takeout, FHA or HUD, some large senior debt product that gives you a 90% leverage and is around a 5% or 100 basis points over the treasury. That's 90%, right? Because think about it, right? You buy a piece of land in downtown Miami, it costs you $2 million. You put $2 million into it, now you got a $4 million piece of parcel. Now you put 35, 40, $60 million into it. You have an asset at the time of development that's worth $100 million. But you put $60 million of your blood, sweat, and treasure and loans into it, right? Wouldn't you like to call up HUD and get an 85, 90% refinance loan to value at 5%? Because guess what? You get to pay your debt off with the $65 million you owe Rob, and now you get to put $20 million in your pocket, right?
Yeah.
That's a great deal, right?
Yeah.
Okay,
And I'm going to tell my friends about it.
that's the strategy for like 95%. Just like gave you a free tip. If you want to be a billionaire, that's how it is. That's how it works. That's how the guys work, right? The problem is with what a lot of lenders won't disclose to you and what differentiates CR Equity from some of these other guys is we not only look at the financial, we look at the regulatory. You're not going to know this, but you can chat GPT and fact check Rob that if you have live live local abatement, you're ineligible to get a HUD loan, right? So what does that mean? That means that your exit DSCR that you thought you were going to get for 4.85% in 3 years when it's built and stabilized doesn't exist. So if you go to a lender and they pencil you at 5% takeout of your HUD loan, word on the street here, Steve, lenders know what they're doing. They've been doing it a while. So they know these things. And depending on where your asset's located, there's a little phrase in the lending community in private equity called loan to own, right? So let me tell you what's going to end up happening. You've got this high loan with this high leverage, and you're down in Miami, Florida, and now you've got this $67 million balloon payment that's due in March of 2029, and it's August of 2028, and your lender's going to send you a nice notice of, hey, your balloon's due in 6 months. Do you want to extend? No, we've got our HUD loan. And you go through the entire HUD process. And then finally in February, HUD comes back and says, oh, you did a state of Florida tax abatement for Live Live Local. It's on your tax assessment. So you either have one or two choices. We can deny the loan or you got to pay back the $12 million of tax deferment and get it cleared to the state of Florida before we can give you this loan. What are you going to do? All right. Now your other lenders out here saying, well, Steve, your balloon's due next month, so where's my 67 million? Because that's what your takeout was written for, right? So now your DSCR is whacked out because now you got to go out and you got to get a stabilization bridge is 9% instead of 5. So now you guess what you got to do? You got to bring cash to close.
Yeah.
and you ain't got it. So I can either hit you with default interest for the next 6 months while I foreclose on you, or I can give you an extension, which you're going to pay $2 million for the interest reserve re-up until you stabilize. Or I can go sell the note off to some guy you don't even know, and he'll foreclose on you. Then that's just how it works. But with our technology, Steve, we factor that because we're probably one of the only direct lenders that not only does senior debt, but we also play nice with PACE equity in the sandbox. Right. So most people treat PACE as debt. We treat it as assessment finance, and we cautiously place it in the capital stack to fill voids and gaps for people who don't have equity. That's a tax assessment in itself because it goes on the tax. So we have a way of accounting for that in the NOI. And when we ask for an appraisal evaluation, we structure it where we look at the cash flow of the asset. We look at the actual valuation of the asset. But we do so in a prudent manner where we say, okay, this guy needs a PACE loan. Yeah, that's debt. And if you take the fact that our senior debt is going to be subordinate to the PACE loan, we should reduce our senior debt by whatever the PACE loan is for. We don't do that. We add it to the top. And as long as we're able to stay within our 50 to 55 to 60% senior loan debt to value, PACE is between 15 and 25%, and the sponsor has a 10 to 15% liquidity into the project, we're fine with it. Because chances are we're going to be the one that's going to do the prem to perm stabilization bridge, which means we can take out the PACE at that time because we administer the PACE through the software. So the client actually gets to do more with less. They get a full up equity. That's why it's called CR equity. We bring the debt and the equity. But the AI places the equity in a capital stack where it's the most valuable. I'm gonna tell you this. I'm gonna shut up about this because we can go on this forever. But most people in the senior debt, if they're looking to get you, they're gonna start your construction loan when you get right the deal because it's a parking meter, it's a bridge loan.
Mm-hmm.
What we do is if we're going to bring PACE, we'll do the PACE bridge first because PACE is a reimbursable, right? And it's kind of like you pay as you need. It's like a line of credit. And then you only have qualifying PACE expenses. PACE tends to be a little bit cheaper than senior debt on construction by about 300 or 400 basis points sometimes. So we'll use all that up first, right? If you get a $20 million PACE loan out of a $40 million capital stack, right, with us, we'll bring the PACE bond in first. We'll let you draw down all your, as much as you can on the PACE. And then we'll bring the senior debt in towards the end. That way it stabilizes and it reduces your interest reserve that you have to pay. So that way when you're on your repayment, your takeout, you save millions of dollars. And see, if I took the interest first on the senior debt, right? So imagine if I had a $20 million construction loan and a $20 million PACE, right? And I'm the senior debtor and it's 10%, right? So it's $2 million a year, 24 months. If I expended that first, you're paying 10% on $20 million for 2 years, or let's say 15 months of that, or whatever, right? But if I bring the PACE in, right, and maybe you only use the construction debt towards the last 11 months of the thing, right? You're only paying 11 months of interest, which is 1.75 million or whatever, versus $4 million of interest if you were to use it for day one. You see what I'm saying? You get the same capital, but the way we infuse the capital in the capital stack and make good use of it with AI allows you to do more with less. And you're able to take that capital, right, and use it for what is needed. And then when you're doing the DSCR or the takeout, we factor that. So when we come in and we actually look at the capital stack, we provide you the takeout. On our term sheets, we give you a comprehensive underwriting document that tells you how we arrived at the decision. Then more importantly, it tells you what the projected takeout is going to be. And then the third thing with generative AI, we tell you exactly how we're going to infuse the capital and roll out that loan so it's beneficial to you. And we show it in plain English with calculation. Again, transparency is not only as good as you and I, right? Because you're the borrower, I'm the lender. It's the entire process, right? You're getting funding, but we're also telling you how we got there. And that was another thing that, we got feedback in our user, the testing was like, clients were just pissed off at the fact that they didn't know why they got declined. They didn't know what made up a decision for a loan. So we got like award-winning value-added feedback. We actually gave somebody a reason. Like sometimes you send off, you get a, you want to get a term sheet, Steve. People weren't even responding to people's like needs, man. They were like, I don't even know why I got, I don't know why I didn't get the loan, and it's like, well, you should, know why you did or didn't get financing. So, but yeah, I mean, I think our biggest challenge, man, is going to be having enough capital, man.
I follow.
You think so?
I follow that for sure. Because right now, for you, it seems like a blue ocean. It's not a red ocean yet. You're making it a little red. You know what I mean? But that's you doing it. I don't know that you're going to have a lot of competitors that have started at the timeline that you started at. And yeah, I understand your Bezos concept, right? Of someone's going to come take it over at some point, et cetera. I get that. But I think right now, as long as you keep adding value, like you said, you keep providing speed. That seems to be everyone I talk to says the same thing, right? You listen to Cody Sanchez, Money Loves Speed. She says that all the time. They all keep saying that. But you're doing that. You're providing speed to your clients, and you're basically, how did you call it the other day? Lowering the barrier to generational wealth, right? I think that's what you said.
I mean, the biggest thing for me, Steve, is what I would love to do is I would love to make $1 billion off of this technology, right?
Sure.
And I would like to give 99.8% of it away to impact investment. And the majority of that is to train, sustain, and develop kids like you and I that come from Alabama, they come from different parts of the world. They're not the best looking kids in the world. They're not the smartest. They certainly don't have a lot of money. We had to go to the military to get ahead in line, but uh, they're not looking for a handout. They're just looking for an opportunity, right?
Yeah.
And for me, I kind of look at it as, how do we make that opportunity happen? And that's one of the things that we've been successful at. Some of the success stories we had internally. We have one of our product managers is a Nigerian product manager. She's a student intern. She contacted me on LinkedIn. She has a master's degree in computer science and engineering. One of the smartest young women in the world. Nobody will hire her. She just couldn't find a job. She started off and she was like, "I will work for free." Like, I mean,
Yep.
you wake up one morning and I get 150 LinkedIn messages a day, right? Subject line is, love what you're doing at CR Equity. Want to get an internship, will work for free. And of course, I'm like, okay, what's this about? Have a call with her. Smart young lady, got all these credentials, and all she was looking for is an opportunity.
Hmm.
And that young lady she surprises me sometimes. She's hungry, she's thirsty, she's looking for improvements. She always finds bugs. She takes the initiative. On my phone, I have the Jira tied in our Slack channel. So every time we have a Jira ticket, I get an update, and it's a few hours ahead over there in Nigeria, but she's in the middle of the night just throwing tickets and resolving issues and putting comments in the software. And when I wake up in the morning, I have like all this stuff. It's like a blood red map. But um, when we talk about like cross borders and impact investment, it's not just about money and about property and providing capital for lowering the barrier of entry. We're generationally changing lives because the jobs that we're offering people who otherwise wouldn't have those opportunities to. And that's what's fulfilling is that we're not at Amazon, but if we can make a difference in one investor's life, if we can make a man that's in Roanoke, Alabama, that's trying to build affordable housing for 384 families, that the guy sent me when he sent me the file, he had a appraisal. December 2020, he paid $4,000 for the appraisal from CBRE, and I asked him, I said, why did you pay this kind of money for an appraisal? And he said, well, I was told that if I went with CBRE or if I went with Newmark or one of these like top firms or whatever, they would look at it and they could tell we were serious and they would take the file. I said, well, what happened there? He goes, well, I've sent it to two banks and they both declined it, saying that it was too rural. You see what I'm saying? It's like the guy has 20 years experience. He has a PFS of $20 million. He's done 1,300 doors, right, in his day. right? I mean, this is a good file. Not everybody lives in downtown Brickell, man. There are good folk in Smith Station, Alabama, and Phoenix City that, are investors that want to build property, right? And
Hmm.
that's what we're going to that's what we're going to exploit. We're going to provide opportunities for people who, for all intents and purposes, couldn't spell bank, would be laughed out of truant, right? JP
Hmm.
Morgan wouldn't even put them on the calendar, right? But by the time, so I put something in the thing today, and I told my crew on marketing, I said, look, this is what we're gonna do. We're gonna come out with some type of moniker that while banks are asking questions, CR Equity is funding deals.
Yep.
So
You're
uh,
not standing in the way of the deals. Yeah.
no, I mean, no, dude, listen, we're not going to be a fun. We're not, I'm not going to say we're, Jesus of Nazareth, right? We're not going to be Christ. We're not going to be like the anointing, right? And I'm not trying to be blasphemous. I'm being serious. Like I'm a
Yeah.
Christian follower. I believe in Jesus, my Lord and Savior. He is the reason why I'm here, and I'm very thankful, right? And
Sure.
I do believe that we can with miracles, right? There's just some things we're not going to be able to, but at least you will have a clear and understanding as to why it didn't work out. You see what I'm saying? Like, and then we could provide help to facilitate that. And then as we move forward, Steve, we're going to JV with people. If they've got land and they want to pledge it and they need equity or whatever, as long as they've got the experience and it's a data center or it's a school or if it's something that we feel as though is good for humankind or whatever as a part of our impact investment fund, we're going to go after it. Try to help humanity.
A noble way to spin it at the end. Yeah. I like that.
Okay. I mean, have you ever, when you see a funeral processional, man, have you ever seen anybody drag a hearse? I mean, drag a bank vault? You ever seen a hearse? You ever seen a chase and drag a bank vault? I've never seen it.
No.
It's
Yeah.
amazing how, people in life treat people, the kind of money they have. And then when they die, we all shrivel up, we all prune up, we all go out the way we came. So let's do some good with this stuff while we have it, right?
No, that's a good way to do it. I respect especially that fund at the end as well.
What else do you want to cover, man? This is your hour. This is your thing. I feel like I just been talking. You told me to
That,
talk. So I
that's
just
what I want you to do. That's why you're here. No, seriously. Let's see. Yeah, okay. So you alluded to it a little bit with where you wanted to be in the next 6 to 12 months. You talked about some innovations, you talked about some expansion, you talked about going global a bit more, some in your hiring and some in your, well, I guess, human capital and some in the property space. The next 6 months to 12 months, what else do you want to move with your company? What other kind of rocks do you want to kick over? What do you want to disrupt?
We're going to be rolling out with the PACE Fund. I'm very confident. I know John Kenny is the CEO of Clean Fund out in California. I like the guy, man. I mean,
Yeah,
we
that's the
just
guy you were talking about last week, right?
yeah, yeah,
Yeah. Yeah. Okay. Yeah. You couldn't find, like, you couldn't run out of good stuff to say. Yeah.
yeah. He's a good guy, man. He's an older gentleman. He's been in this space 30, 35 years, but he gets it. And he told me, and one of the things that I knew, I'm a young man. I make a lot of mistakes, and he's very patient. But he sees the value in AI and helping him do his business. And more important than that, we're going to move into a collaborative partnership with Clean Fund because again, we want to help people develop their dream, right? We want to do something in a smart and pragmatic way. And with John and bringing on PACE, our clean air assessment financing with CPACE, we're able to bridge. Number one, we provide a huge value, man, right? We take a 60, 70% senior debt capital stack. Now we can take John's, because he writes investment grade PACE bonds, right? He does it. He's an administrator. He writes them for us, and we essentially put them in the capital stack, and he has connections with life insurance companies and various different uh, firms that buy these investment grade bonds. So the cool thing about that is we're able to go issue a bond at 50 to 100 basis points, fund it, and then we come back into that deal. We fund it on Friday, we season it, and then we sell it to Prudential or MetLife or whoever on Tuesday next week. And we sell it at a discount. We sell it at 300 or 400 over SOFR. They put it in their retirement annuity fund or whatever at 600, 700, whatever, continual returns over 30 years because it's a bond. The client, you, Steve, or whatever, you're getting 25, 20% of your capital stack at 5%, 6%. So why would you go out here and pay these private banks 6, 7 points to go out and raise equity for you? And then, I mean, the biggest thing that you have to worry about when you're an investor, especially on a large deal, if you talk, and when you actually start interviewing some of these guys that own portfolios, they'll tell you, right? They'll tell you the the treachery of raising equity. This thing called COVID really interrupted the ability to actually raise equity. Nobody raises simple equity anymore. I wrote an article about it, right? It's very hard to raise simple equity. Some people can still do it, but for the most part, the reason why LP equity is kind of dying by the wayside is that there's this thing called preferred equity now. Now you're going to pay a preferred rate of return, and I'm going to get my money back when you sell it. So a preferred rate of return may be like combined total, the cost of money may be 5 to 7% a year, and then you're going to give me 10% per year that you have my money out as a loan, pretty much, right? As a mezzanine loan. So you're going to pay me 15 to 17 points for that $3 million, right? Which, depending on what you got, that may get more expensive than the doggone senior debt piece. So why would you do that? And I can take and do the exact same thing with PACE as long as the qualifying and most things now that you do on value add, rehab, and senior debt are qualifying PACE expensive. We just have an AI tool that goes to your construction budget and says, "Oh yeah, 35% is qualified for PACE." There you go.
Yeah.
Right.
Yeah.
So now instead of you have that uncertainty, if you're going to be able to raise that $5 million for that project, I can give you a quote on PACE based on your construction budget and say, yeah, within 5%, I'm pretty sure I'm going to be able to get you 4.5, 8 million or whatever. And we go write your bond for it. It's an investment grade bond. And now you don't have to go and worry about the uncertainty of being able to issue, getting your project off the ground because now you have both a debt and equity solution. So the biggest thing that I see in the next 6 months is I would like for us to be right around $150 million worth of loans issued. A nice equitable split between our bridge products, our Flex 50, and then also some of our PACE, and working with John and some of our PACE folks on providing some value add for the environment. Right, our clean air energy and stuff.
Yeah, balancing that portfolio a little bit.
Yeah.
Good plan. All right. So if there was someone thinking about jumping into the arena like you did, you see a little poster behind me. I'm sure you've heard that quote before, men in the arena.
Yeah.
Right. Teddy Roosevelt stuff. But in some way you have done that, right? And you went from something you were familiar with, which I'm loosely familiar with as well, into the arena that you did not know as much about as you had hoped you would. You've gotten some scar tissue along the way. You figured out how to create value. You found out your own pain points, which became the same thing as a lot of other people's pain points, right? I know there's scar tissue. That's why all those schools you went to in the military exist, like,
oh yeah.
How do we know how to make drop zones? Because there were a lot of oopsies,
A lot of broken legs. A lot of broken legs,
Yep.
A lot of bad backs, right?
Yep. And you found out some of those things yourself before you start codifying your processes.
Yes.
Now there's an SOP for it.
There you go.
But there wasn't until there was scar tissue.
You were the SOP. Yeah.
So
wow.
You learned a lot of those things the hard way and watched some other people do it, hopefully, before you did it. What advice would you give to somebody who had a really good idea, saw a potentially blue ocean, like you kind of found there, tokenization, blockchain plus AI, all this kind of stuff, and was consuming a lot of content, feeling they should do something about it, but just hasn't had the nudge quite yet to do something about it? I know you know that position because
yeah. So Steve, it's very easy for you and even me, right? Being an Air Force guy, it's very easy for us to answer this question, right? The difference between a W-2 and an entrepreneur is one distinct difference, right? We have self-actualized the ability to bet on ourselves. I know, and it's not a narcissistic or egotistical thing. I just know you because you and I share a common bond.
Yeah.
In the back of your mind, just like me, I can do fucking anything. I can do anything, right? Like, you know what I'm saying? Like, I've got my A shot off. I've been smoked near to death. Like, there are things that you and I probably have conversation with now on this thing that are like, how did in the living crap that we make it through that? But at the end of the day, any person that has a dream, right, and is thinking about taking the leap, number one, you got to have faith. You got to have faith in something more than yourself, but you got to really believe in yourself. Number two, I always tell people measure 3 times, cut once. Don't give up your dream, but also don't go feet first into something that, become a student learner, become a learned person, right? Learn. And then more importantly, and this is going to be the biggest thing in the world, don't listen to anybody who hasn't done it. Man, I'm gonna tell you something, and it's something personal. I know this is gonna go on the internet. Several months ago, I went to Manhattan. I had a conversation with a private equity firm. They saw exactly what you saw. They offered me 7 figures cash. Wanted I know how private equity works. They wanted a majority stake in the company. They wanted me to stay on for 2 years. They basically wanted to drain me from my intellectual property, stay on, and they were going to give me a nice salary. They were going to give me more money than I could ever spend in my entire life. And I made the mistake. I had a conversation with a friend of mine, a very, very close friend of mine, and they put that doubt bug in my head. Well, one in the hand is better than two in the bush. And what are you going to do? Da, 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 da. And, what happens if popcorn pops? And if we go in the nuclear war holocaust with North Korea, and I had to, man, Steve, it took a week and some therapy, right? I had to get out of my own way with that. And Alex Hormozy and Layla both say, don't take advice from people who haven't, because they will interrupt your dream, man. They're going to find that's the reason why they punch a time clock. I'll tell you this. My brother, he's not my brother, but he's very close to me. We went to college together, right? I've known this man for 20 years, well over 20 years. He's a doctor now, right? Nice house, lives down in Southern Florida, Tampa, Florida. Got a boat, beautiful family. He looked me up. He got the Inc. 5,000. He's like, man, Rob, I really want what you got, man. It's easy. I'm like, man, I let him think that because I didn't want to ruin his day, right? I didn't want to ruin his day, Steve, right? But he said something to me, and I'm saying this so that all your listeners and yourself will remember this. That, man, I want to have the life you have because I want my weekends. I said, man, dude, I haven't seen a week. What is a weekend? Like now I make time for my son and for church. Like my kid, he has swim class, he has baseball, we have, all his activities, and I make time for my family, right?
Mm-hmm.
But brother, that time has to be made up somewhere, right? And it usually involves on a treadmill, 0 4 15, reading something, almost killing myself, or staying up 10, 11 o'clock at night for something. It's got to be made up, right? So if you're a person that likes weekends and you like benefits and you like having an account that never gets overdrawn and you want to continue to put in your 401k with your matching, and you want to retire at 57 and a half or 62.5 with your full benefits, stepping out in entrepreneurship is probably not for you. But if you like working hard, like adding value, if you like making a true impact and difference in people's lives, if you can see that, and you can see a gradual, then sudden change. And if you like pain, and then one day waking up and getting a wire transfer because all your hard work has started to pay off, and that one wire is more money than you've made in a year, in 3 years, and it continues to happen once you put a system in place, then this is where you need to be. But you have to believe in yourself, and you have to believe in what you're doing. And then the biggest thing, Steve, is you have to get around people who are going to add value to your life and help you get there. Believe it or not, like this conversation, you and I have never met, and we're going to meet. This has added value to my life. You know why? You know why it's added value in my life? Dude, I'm going to tell you this right now. I sat in front of a Fortune 500 CEO. It took me, right when I started this, it took me months. I did the coding myself. I created a prototype, MVP. So originally, just true baseball, I've gotten hit in the shovel about 6 times in the forehead with this platform. It's morphed multiple times. Originally, this platform was supposed to piggyback on this tech real estate firm that specialize in tech, and that's like their thing, right? You can figure them out. I'm not going to tell you there, but they are a tech firm. They had at the time they had like 89, 91,000 agents, and we were going to do the Google subscription as a service model and offer this as part of their tech package and just charge like $29 for each agent. But the benefit and the pain point that we were trying to solve for this firm was that these agents were showing houses and they were showing investment properties to people at their convenience, which wasn't 9 to 5. So if they wanted to go to Bank of America to pre-approval or Capital One, in order to write an offer, you had agents that were having to wait till Monday morning. At that point in time, people, real estate was flying off the shelf. And like 39 different states, you can't submit an offer without having proof of funds or some type of pre-approval. Like it won't even be looked at by the receiving agent. So our thought was pretty much what we go through here. You would come in the process. We would have all that data. We know what the assessed value of the house is. We know the first link. We have all this public information data, and we're able to give you a really nice term sheet in 5 minutes. So now that firm that prided itself on closing all these deals and time to close, we had a built-in solution where we were going to terms, we were going to open up escrow. They could order an inspection. They had all this stuff. This guy tells me, yeah, man, that's a really good banking app. I just don't see value in it. And then 9 months later, I get this really nice message from this young man, this ranger that says, I think what you're doing is revolutionary, and I think that you are on the cutting edge of doing something that nobody else has even thought of. And you don't do this shit. You don't do this, Steve. This is not what you do, but you get it. And you're not the first one that's done that, but I believe in you more because of your background and what you've done. I trust your judgment because of the things you've experienced. Like I know you know how to wield a weapon. I know how you know how to use a K-bar. I know that if I needed someone to clear a room, I know who I'm calling, right? So because of that, those are the things that keep me going because it does get lonely at the top. It gets very scary sometimes, right? It's not the money that keeps me motivated. It's the people like yourself, right? It's like, this guy gets it. He understands it. He might not understand all the intricate parts of it. He may not understand nodal analysis and regression and how to, change this large language to this and put, NLP right here and all the, the structural technical diagram and background, right? And the interlocking of crypto analytics and nanoseconds, right? And being able to, different things. Some of that stuff I don't even know, right? I'm just being briefed on by my team. But for a man, a young black kid from Anniston, Alabama, that grew up son of a gentleman that dropped out of high school, got his GED, went back to college when he went to the military, the son of a woman that graduated Southwestern Georgia Community College. I don't know anything else in my life but how to grind, man, right? So to answer your question, I encourage anyone to break the bonds and barrier and work for themselves. Because if you do find the thing that motivates you and keeps you engaged, this business of ownership and business and doing things, Steve, is really about being relentless and having tenacity. And you're going to sit in front of Fortune 500 CEOs. They're going to tell you that your stuff is shit. They're going to tell you you're out to lunch. They're going to tell you that there's no way that's going to work. And you're going to get that about 99, 97, 98%. It's just going to happen. But it's kind of like when you're deployed and you're getting your ass shot off. What are you going to do? Are you going to give up and take one to the side of the dome, or are you going to give them more than they give you?
It just falls in line with the normal rules of sales, right? Hey man, you get a 2% close rate. Like, let's go. Lose those 98. That's fine.
Here's the deal with that, Steve, and I agree with you 100%. But what we're doing right now is so 6 months from now, you asked me about a couple things. You asked me, and I gave you John's strategic alignment. But we've aligned with Rate Insurance. We've also aligned with Doubly AI, which is a credit repair company. Rate Insurance has about 100 some odd thousand policyholders currently. And we've had a conversation with Jeff over there, Jeff Wingate, CEO, and great guy, by the way. In fact, let me tell you something, man. The people that we have met through Inc. 5000 and just by luck, right? Just running into people and them giving, us an opportunity to do these things and bring AI to them. I cannot tell you, it is literally God's hands on us, right? Because some of these people, if it was me sitting across and I saw this stuff and I was like, what are you guys doing, man? So anyway, we have some of the best partners that what we're doing right now is we're growing an ecosystem, right? So I'll tell you this and I'll let you go because I know you got to go and I got to go. But last year we pulled some data and we found out the insurance was an issue. Remember how we talked about how people just because it just slips your mind, right? It's you know,
Yeah.
it's kind of like, all right, insurance, no big deal. People think, and now I guarantee you with your followers, they're going to get online, they're going to fact check me. Oh, I can get an insurance quote in like 2 minutes. Anyway,
You can at CR Equity. Yeah.
you can, right? And we actually have an SLA put in place. Rate Insurance will get you a quote same day or by 9 a.m. the next 10 a.m. the next morning. I think it's written in the contract, something like that. But they're really good. Great guy. But we know another thing, right? Again, adding value. Now, I'm betting against myself because what do you think our underwriting engine does whenever we get faced with a client that has a great asset, but their credit sucks? What do you think happens to their interest rate? It gets
Oh,
jacked. So if a client comes in and the project, they got good experience, they have good experience, the project's cash flowing, but they have either a lower than marginal credit score or they either lack experience. There's, something in the actual borrower because we do three types of diligence. We underwrite the borrower, which is personal due diligence. We have project diligence, which is the asset, and then we have feasibility of bringing both of them together. Can this guy or girl manage this thing, and have they done it successfully, right? So it's like a three-legged monster. In the actual engine, the AI engine itself, it balances these things. And if there's something that's out of whack, it assigns a risk factor to it, right? And like you having a poor credit score doesn't preclude you from seeking a loan, but it may make your interest rate go from 9% to 11 or 13 or 15, depending on what it is, depending, whatever. If it's a short-term bridge or whatever, you may not be thinking about that, but let's talk about like brass tacks, right? So the cost basis on $1 million, the difference between a 8% interest rate and a 15% interest rate is almost double. It also decreases your leverage. Because like if I give you a max LTV of 70%, but I charge you an interest reserve, but I got to go up 7 points on the interest, that now brings you down to an effective, right, LTV of 63%. So it has a direct causation on number one, how much cash you get, how much you pay for it, and when you get it. Right. So what we ended up doing is we said, look, we want to loan more money to good people and things happen. So how do we like prove that? Again, we're betting against ourselves. So we're teaming up with a company called AI. They do credit repair utilizing AI and they can fix, their typical it chart, is $29, $30 or something like that. And it's actually free depending what you want to do. And they've got a couple programs that are like less than $30 or something like that. But you can see an improvement in your credit score by 70, 80 points in a month utilizing AI. Right? The thought pattern is that, Steve comes in, he's got a 620, he barely makes it. We hit him with 13% interest on his bridge loan. He stabilizes his asset. We send him over, we send the file over. We ask, hey, is it okay for us to partner you with one of our preferred partners on credit? They get your credit fixed. Now your asset is stabilized. We're able to do your refinance, and now we take you from 13% to 7.5% with a nice little prem to perm. We charge you a 1% refinancing fee, but we reduce your interest rate. Now you're happy, right? Better credit, saving money. Really just got paid on, their deal. But guess what? Doubly has 80,000 people in their ecosystem on there. So how many people do you think once they fix their credit own businesses out of that? And how many of those people do you think are looking to buy property? So we're building an ecosystem where we have bilateral mutual ecosystems to support people. That's the reason why we want to work with folks like yourself. You get it, you understand it, you're able to speak to it, and you believe in it. People do business with people they believe and they like. It's not about, Steve, it's not about expensive. It's not about the cost of money. You've got people right now that are paying 12, 15% interest rates on bridge loans, and they're waiting 45 to 60 days to get funded.
Yep.
So we're going to do it for 11% and fund them in 4 days. And then they only need a 90-day bridge loan, no prepayment penalty. So, you know what I'm saying? The market already, it's not about the reason why we're successful and moving towards great success is not doing anything that the market doesn't tell us. People spend $1.6 trillion on bridge lending a year in the United States alone. And the average like bridge refinancing rate is over 10%. So it's not about, is there a market for it? People, yeah, of course, there's a market. Private investment. Only about 4% of the actual commercial real estate deals fit in that nice FDIC box. The remainder of it is all this gorilla hair that needs to be cleaned up, that you come to CR Equity, get that nice Gillette born shave, you know what I mean?
Yeah.
But yeah, man, like I really do appreciate it. And God willing, I would love to come back on the cast in a few months, and maybe we'll have some cool success stories about some of the stuff we're doing, kind of show you what we're doing.
Sounds good to me, bro.
Well, Steve, man, this has been easy, man. When I come home next time for Christmas, I'm gonna take you out to want to go to Laredo's? Where you want to go?
That sounds good to me.
Take you over there. You didn't think I knew about that, did you?
Oh, well, yeah. I kind of assumed that you knew a little bit about everything because you did allude to, growing up around here and stuff like that. So I figured you knew a couple of spots.
Yeah, man. Well, I appreciate it, my brother, and I'm gonna get in here and make dinner for the little one.
Sounds good.
If you have any other questions, or if you want me to review the tape, or I don't know if you're going to edit it or whatever you're going to do, but let me know when it's available, and I'll make sure. I want to add you on LinkedIn. www. CR Equity, CR Charlie Romeo Equity.ai. My email is rob@crequity.ai. Steve, if you have any viewer or subscriber that needs help with a loan, wants to figure out a capital stack, has a question about tokenization, real estate, please do the email introduction. If any business comes out of that, we'll make sure that you're taken care of on that. We have a great affiliate program. I would love to bring you a part of that. And then, as we continue to write white papers and do stuff on the technology side, we'll make sure that you're plugged in on what we're trying to do on this side over here.
Man, I appreciate it. Every time I find someone who could benefit from either other people that or people in your ecosystem, such as WAI, things like that, or your own service, I will absolutely connect you.
Yeah, man. And we're coming out. We'll have the mobile app out. The development team better have it out this week. But yeah, we should have it out in Google Play and Apple Store before Christmas, which will allow clients to stay upbeat with their loan requests, both commercial and business loans. So we're going to do the real estate and also the business loans. And then we've got some really cool stuff coming for CR Equity 2.0 version. I hired an AI certified AWS chief development officer, and he's 28 years old. He has a PhD in data science from Stanford, and he is the true thing. So he's going to really build out our AI agent. Like, it's going to go from being an infant to a grown man here in like the next 6 months, man. It's crazy.
The right people on the bus.
Yeah, man. Yeah. So, well, listen. Steve's always good, man. Been a blessing. Let me know when the recording is ready to go. We're gonna start our podcast in January, and then I'll make sure you're on that. But I'd love to figure out how we can continue to help your business grow. We'll have some more conversations about that. But
yeah, you let me know when you got any opportunity you want, any connection you want. I'm around.
Yeah. Anytime, bro. Well, I appreciate it. You have a blessed evening.
Same to you. Thank you.
Take care, bud. See you.